Well, the stock market used to have kind of knee-jerk positive reactions whenever the Fed announced it wasn't going to raise rates, but not in the past 24 hours. Markets showing no love at all for Janet Yellen's shocking announcement that she would keep zero interest rates for now. So if soft Fed policies help neither the stock market nor the economy, what good are they? Why does the Fed keep them going? Steve Forbes is back along with billionaire investor Wilbur Ross. So, Wilbur, I think it's kind of a good news that the market is reacting negatively to the Fed's inaction and something that doesn't help the economy. What do you think?
Well, I think the market, everybody felt that she should have raised, and everybody felt she wouldn't raise. So I don't
Except
think
for the 9 members of the Fed board that agreed with her.
Yeah, that's what really shocked me, that there was only the one, I think, from the Richmond Fed,
right, Lacker,
who voted against it. That shocked me. I can't imagine that it was a 9-1 kind of a decision.
But the market's reaction, is that good news that maybe the market finally has given up its addiction to easy money?
I think the market was reacting to something different, namely fear that Janet Yellen knew something bad about the economy that the market didn't know, because that's the only justification for it. If you watched her press conference, there was not much substance to it.
No, there wasn't.
We need a little more time about world affairs affecting the U.S. Well, if we're going to wait for world affairs to calm down to raise rates, I'm going to be dead and buried.
So, Steve, is the market's reaction, negative reaction, just about fear of what's coming in the global economy, or is it also a little concern that the Fed can't get out of the zero interest rate policy?
Yeah, well, the Fed had signaled in many ways that this thing was going to happen on yesterday, and the fact that it didn't just shocked people. And so the Fed usually doesn't pull surprises like that. And then there's the realization.
But the market very rarely reacts negatively if
well,
at
the
zero
market
interest
is
rates.
finally waking up. People are waking up that what the Fed is doing now is hurting the economy, not helping it. You need to have more real pricing of credit to get credit to the job creators in this economy instead of just to large companies, the federal government, and Fannie and Freddie. And you have to have real prices. So they thought the Fed was going to finally move in that direction, allow our credit markets to get less twisted, which would help the economy.
And Wilbur, it's not just in the United States either. Central banks all over the world are finding out that you have to do more. A government has to do more than just have zero interest rates in order to get the economy moving.
Well, that's true. Look, if the only thing keeping the economy going is 25 basis points and 25 basis point rise would kill it, you got nothing. It's not really worth worrying about.
So, Steve, why does the Fed keep doing something? The Fed and all central banks keep doing things that aren't working, that aren't helping the overall economy.
It's the definition of insanity. It hasn't worked. It hasn't worked in Japan for 25 years, zero interest rates. It hasn't worked anywhere it's been tried, including here in the United States for 6 years. But they don't know what else to do. And they also aren't pushing the structural changes like our horrible tax code, what health care and other regulations are doing in the economy, structural things in Europe as well. Japan, just one example, their payroll tax is now 35%. The payroll tax.
Well, Wilbur Ross walked into this studio wearing a little pin on his lapel that is from accommodation from the Japanese government for your service in Japan. What do the Japanese do? Don't they realize after 20 years of low or negative growth that, in fact, this zero interest rate policy doesn't work?
Well, they're doing much more than that. In fairness to Prime Minister Abe, he's bringing women into the workforce, which is the thing that Japan really needs because its demographics are even more negative than in most other
But what about their central
countries.
bank policy? Do they realize that's a mistake?
I'm not sure in Japan's case that it's as much of a mistake as here. Japan's rates have always been low. So it's not that this is a new policy just to deal with this situation. It's a little more extreme, but I can't remember the last time that interest rates were over 1.5% in Japan. So it's not the same frame of reference that we have.
Well, it's a new world when the market reacts so negatively to zero interest rates. Wilbur Ross, Steve Forbes, great to see you both.
Thank you, David.
Thank you very much.